Imagine waking up on the first of the month, checking your bank account, and seeing nothing. The VA disability or pension payment you rely on, gone, frozen. Panic sets in immediately, and when you call the VA, they use a term that sends a chill down your spine: Treasury Offset Program. What they don't explain, what no one prepares you for, is the silent, powerful handshake between the IRS and the Department of Veterans Affairs that gives the government the authority to instantly halt your income stream. This isn't just about owing money, it's about a bureaucratic link that operates entirely outside the standard VA claims process, catching hundreds of thousands of veterans completely off guard every year. If you receive any form of VA compensation, pension, or educational benefit, you need to understand the 7 hidden triggers that empower the IRS to freeze your money without warning. The very first mechanism we need to understand is the legal foundation for this entire operation: the Debt Collection Improvement Act of 1996. This law is the skeleton key. It essentially deputizes the Treasury Department, which includes the IRS, to act as the government's central collection agency. When the VA determines you owe them money, whether it's an overpayment of disability, a miscalculated pension, or an educational debt from the GI Bill, they don't handle the serious collections themselves. They refer that debt to the Treasury Offset Program, or TOP. This referral instantly changes the landscape. Before the referral, you are dealing with the VA Debt Management Center, DMC. After the referral, you are dealing with a mechanism that has the power to intercept any federal payment owed to you, including your VA benefits, Social Security, and even your tax refunds, until the debt is satisfied. This process bypasses standard VA appeal channels for collection, meaning the freeze is instantaneous and recovery is difficult. The VA doesn't explain that the moment they refer that debt, the IRS's collection arm is activated, shifting the power dynamic entirely. Now, let's talk about the silent killer for veterans receiving needs-based benefits: income verification mismatches. If you receive the VA pension or aid and attendance, your eligibility is based on a strict annual income limit. The VA doesn't rely solely on the financial statements you send them. They rely heavily on IRS tax transcripts. This is the crucial link. The VA uses the Income Verification Match (IVM) system to cross-reference the income you reported to them with the Adjusted Gross Income (AGI) you reported to the IRS. Here's where the freeze often originates. A veteran might receive a small, unexpected payout, say a small inheritance, a stock dividend, or minor income from a side job, and not realize it counts as countable income for VA pension purposes. If you fail to report this income to the VA, but you do report it to the IRS because you filed your tax return correctly, the IVM system flags the discrepancy. The VA then assumes your countable income has exceeded the limit, immediately declaring an overpayment dating back to the point the income was received. They often suspend the pension payment entirely while they calculate the massive debt they believe you owe. And because the source of the data is the IRS, the VA treats the finding as ironclad, initiating the freeze before you even have a chance to contest the calculation. The freeze happens not because you filed a bad return, but because the VA and IRS data didn't align, and the VA defaults to assuming the worst. The next trigger is often the first tangible sign that the IRS is involved, and it hits veterans during tax season: the tax refund offset. Many veterans assume that if they have a debt with the VA, perhaps an old GI Bill overpayment from years ago or an insurance premium they missed, it's just a VA issue. But once that debt is certified to TOP, the IRS uses its massive infrastructure to intercept your federal tax refund. You file your return, celebrate the anticipated return, and then receive a cryptic letter from the Bureau of the Fiscal Service stating your refund was offset to satisfy a debt owed to the Department of Veterans Affairs. This isn't a payment freeze on your monthly benefits yet, but it's the early warning system. It proves the debt is already registered in the Treasury Offset Program database. If the debt is large enough, or if the VA decides the veteran is not making sufficient progress toward repayment, the next step is often the full freeze on the recurring monthly benefit. The offset serves as the bureaucratic declaration that your financial profile is now shared between the two agencies, and the VA debt has graduated to the level of federal interagency collection. One of the most devastating and common reasons for a sudden freeze is the dependency status change, often tied to the forgotten Form 686C. Many veterans receive increased disability compensation or pension based on having dependents: a spouse, children under 18, or children under 23 attending school. The VA requires the veteran to proactively report any change in dependency status immediately. A child graduates college, gets married, or simply turns 18 and leaves school. If you fail to file VA Form 21-6, 86C-1 to remove that dependent, the VA continues paying the increased rate. This seems harmless until the VA's annual data matching catches up. And where do they get this data? Often through IRS records showing a dependent is now filing their own tax return, or through Social Security records showing a dependent is receiving benefits independently. When the VA discovers the discrepancy, they calculate the overpayment, which can easily stretch back years, totaling tens of thousands of dollars. The VA Debt Management Center then issues a massive debt notification, and if the veteran doesn't immediately respond or appeal the underlying finding, the entire monthly disability payment is frozen through the Treasury Offset Program until that debt is cleared. This freeze is particularly brutal because it hits the core disability benefit, which is often the veteran's sole source of income. It's a failure of proactive reporting, but the punishment, the total freeze, is implemented through the IRS collection mechanism. The non-filer trap is another insidious reason veterans find their VA payments suddenly suspended, particularly those receiving VA pension. Many low-income veterans or those relying solely on non-taxable disability compensation correctly believe they don't need to file a federal tax return because their income falls below the filing threshold. However, for VA pension recipients, not filing a tax return can be catastrophic. Remember the income verification match system? If the VA cannot find a corresponding IRS tax transcript for the year in question, they cannot verify your reported income. Because the VA is legally obligated to ensure you meet the strict income and net worth requirements for the pension program, a lack of verifiable IRS data often leads the VA to assume one of two things. Either you have unreported income that necessitates filing, or they simply cannot confirm your eligibility. In either case, the VA's immediate response is often a payment suspension. They don't freeze it because you owe money, they freeze it because they lack the necessary IRS confirmation to continue paying you. The letter you receive will state, "Suspension due to failure to provide necessary income information," but the root cause is the reliance on the IRS filing status. This requires the veteran to quickly file a tax return, even if it's a $0 return, or provide an official IRS non-filing certification to restart payments, a process that can take months while the veteran is without income. If you have received a debt notice from the VIA and ignored it, you are heading directly toward the garnishment loop and the total benefit freeze. When the VA Debt Management Center sends you a letter stating you owe money, say for an overpayment, you have several options: pay it back, set up a repayment plan, or appeal the debt itself. If you do none of the above and the debt remains delinquent, generally meaning 120 to 180 days past the due date, the VA refers the debt to the Treasury Offset Program, TOP, for mandatory collection. This is the point of no return where the IRS mechanism takes over. Once TOP receives the debt, they are authorized to collect 100% of non-exempt federal payments. While disability compensation is generally exempt from private garnishment, it is absolutely not exempt from collection by the federal government for debts owed to the federal government. This is the critical distinction no one explains. The moment TOP activates the offset, they will freeze your entire monthly VA benefit payment, deducting 100% of the payment until the debt is paid off. This is the full devastating freeze. The IRS system is now actively collecting for the VA, and your only recourse is to contact the top affiliated debt management center immediately to set up a compromise or a repayment plan to reduce the monthly offset percentage, hopefully back down to 25% or 50% instead of 100%. Finally, knowing the IRS VA link is active means you need a clear resolution path when the freeze hits. If you wake up to a zero balance, do not call the standard VA benefits line. They cannot help you. You must immediately contact the VA Debt Management Center, DMC. Your goal is twofold. First, stop the 100% freeze, and second, appeal the underlying debt. To stop the freeze, you must ask the DMC to pull the debt back from the Treasury Offset Program. They will only do this if you agree to a structured repayment plan or a compromise agreement. A compromise might allow you to pay a lower lump sum to satisfy the debt, while a repayment plan will reduce the monthly offset percentage, e.g., from 100% down to 25%. But remember, agreeing to a repayment plan is an admission of debt, making it harder to appeal later. Therefore, concurrently, you must file a formal appeal or request a waiver for the underlying debt. A waiver asks the VA to forgive the debt, arguing that collection would cause financial hardship and that the veteran was not at fault. This process is slow, but it's the only way to permanently remove the threat. The key takeaway here is speed. The longer you wait after the freeze, the harder it is to convince the DMC to pull the debt back from the aggressive IRS collection arm. The reality of the IRS VA link is that these two agencies share data, and the Treasury Department is the collection muscle. The VA uses IRS records to verify income and dependency, and the IRS uses its offset program to collect delinquent VA debts. The payments freeze because of a failure in one of two key areas: proactive reporting to the VA about changes in your financial or family status, or passive non-response to a VA debt notice. The profound truth is that your VA benefits, which you earned through service, are not immune to federal collection efforts once they are flagged by the Treasury Offset Program. To maintain your financial security, you must treat every VA debt notice as a ticking clock, and every change in your personal income or dependency status as an immediate reporting requirement. Don't wait for the freeze to learn this lesson. Understand that the moment the VA refers your file to the Treasury, the IRS is holding the switch that controls your monthly income.